Hello, my dear listeners. In this video today, I will be covering the most important, in my opinion, news related to precious metals. I will take some general approach on hyperinflation and what could happen in precious metals. And at the end, I will analyze the 3 days gold chart to see potential pullbacks and where we are in the cycle and what we experienced previously when we hit some intermediate tops. Okay, so first I would like to start with this video. I think it's a major development that influences gold and silver prices right now.
The answer, because you've already seen sanctions used against Iran. So you ask yourself, where can I put my wealth that cannot be frozen or stolen? And the answer is gold, but there's more. Gold matters not just because it's immune to confiscation, but because it enables development. That's where the BRICS gold vault system comes in. Anyone who's long gold, like this small African country, seeks to leverage gold's buying power for in-country development. Okay, the vault system comes in like this. The BRICS are building and linking vaults across member states, from Saudi Arabia to Hong Kong, and eventually in Africa itself. The system allows you, as a nation, to hold your gold locally, or at least geographically diversified, while centralizing the accounting and diversifying the counterparty risk. Here's why it matters. This is why they're doing it. As a resource-rich but infrastructure-poor country, you want to modernize. They've been wanting to modernize for years, more or less. You want highways, you want airports, you want refineries. Under the BRICS plan, eventually, if they get it right, you can pledge your gold into a vault. We cataloged this in May. Use it as collateral and borrow against it, often in yuan, to pay for those projects. So I need a highway built. I go to another country. I don't have dollars. I have gold. Okay, where's the gold that's in the vault? We'll blockchain the gold in the vault. Okay, now we'll convert the gold into, we'll give you a yuan loan against it, and then
okay, so here we go. We have a development. This is one of the channels that I recommend if you haven't subscribed yet. All the material is going to be in the description below. But the major thing in this fragment is about the new use of gold. So the gold could be pledged, put on a blockchain, and deposit somewhere where it's going to put on a blockchain and be collateralized as a loan. I think that's the expands the use cases of the gold and silver, and it's a major development. Especially it's done on a national level, so the nations will start holding gold and use it instead of the US treasuries, which is much safer and much more democratic approach. It doesn't favorize any of the countries. Okay, so that's the first thing. The next thing I would like to cover this, and I will start with this fragment.
Everywhere you look today, prices are rising quickly. Whether you're looking at assets or goods, real estate or stocks, crypto or gold, it looks like everything is a bubble. But if everything is in a bubble, maybe nothing is. Maybe the real problem is in your measuring stick. Maybe the real problem lies with your denominator, your currency, the dollar. The price of gold has recently broken out from a multi-month consolidation pattern and is currently at all-time highs, trading for $3,629 per ounce. Silver as well is hitting prices that it has only seen a few times in history at over $41 per ounce. Bitcoin as well is near its all-time high, trading at $112,000. The S&P 500 is at just under 6,500, and within the last couple of trading days has...
Okay, so I'm not gonna continue this fragment any further. I will encourage you to watch this video, but the point is here later on that the author is saying that everything is so high, measure it in dollars, but then he starts measuring the assets and the prices of different items in gold, and he measures like rent or real estate, and then and the stock market in gold, and then he makes the very good point that if you measure things in gold, it's not that expensive. So we are slowly going to transit, I think. Well, it's not something that is going to happen in 1 year. Of course, like 99% of the people are not going to notice it and not going to use it, but eventually we will have some countries maybe that will introduce a legal tender for gold and silver, and you will be able to write your contracts in gold and silver price. Imagine your salary, it's nominated like in silver or gold, or your rent, or depending, like the market participants will be able to choose in certain circumstances to use the gold and silver as a measure of value to write their contracts. So, and we will slowly transit to that system. So that's something also I think will be you know, very beneficial, and will expand the gold and silver uses, and will attract more people into this sphere. So then next thing is, it's very interesting, and I will later do the separate video, because the author of this next fragment is thinking what is going to happen with your real estate or with debt in the high inflation or hyperinflation scenarios. And well, it's not one-sided approach here, like you know. So let's take a listen what he has to say at the beginning.
Landlords were paid rent with bundles of worthless banknotes, and one industrialist, Hugo Stins, became the richest man in the country by borrowing huge sums and buying hard assets before the currency collapsed. His debt shrank to nothing in real terms, while his factories, mines, and real estate skyrocketed in price along with everything else. It's a counterintuitive story. In a currency meltdown, real estate can simultaneously create fortunes for some and chaos for others. This raises a big question. What would happen to American homes if the US dollar were to collapse in value? History offers some clues about what would happen.
Yeah, so this is like, you know, why I brought this fragment to the video, because it's not about gold and silver, but it's about real estate. But the point I want to take from this, it's about what happened with the investment in the hyperinflationary scenario. And well, my question that I would like to ask my audience, because if eventually you know, the hyperinflation or high inflation destroys the wealth of many people, destroys the middle class, so you will run into the situation where you have no potential buyers, because if you know, substantial number of market participants are impoverished, yes, it's going to be like, they're not going to be all impoverished equally, because some of the, like a few of the people will become extremely wealthy using the situation. But if you watch, it's not one-sided. It's not that easy. Like, you know, you borrow and your debt grows in value, or you get like, you know, gold and silver, and then you go and buy everything with it later on. Because to do such things, you need potential buyers for your assets. And when those buyers evaporates, and when the buyers actually holders of many assets become sellers, because they're, you know, they lose their income, they lose their business, they have to complement their retirement by selling more and more of the assets that we hold. Well, it's interesting. It's not very interesting, but it's something to think about when we, like, you know, thinking, oh, like, you know, I'm gonna become a millionaire, like, you know, like a few ounces or 100 to 300 ounces of silver, maybe buying a house in the future. Like, it's something to think about the value, because we have to think about the value. And I think I'm going to make a separate video about this, but I just use this fragment just for my audience to, you know, for now, something to think about in environment, what's going to happen with your investment. When you run potential, like everybody becomes the sellers to survive, basically, or to complement their income, and there is no more buyers for the assets. Like, it's something. It's an open question for my audience. I will be interested in what if anyone will be so kind to comment on that. Okay, so the last point of my videos, it's a gold chart. I would like to do some intermediate analysis. So assuming that it's 3700, what we reach its intermediate top, what is going to happen? Because if I take first this trend line that runs from, you know, some time in 2024, we right now are already 17% of this trend line. And last time it happened, you know, is here at this point we were at 18%, because I checked it before I start recording the video, and I'm trying to, there you go. Yeah, so like this, 18%. So you see, we didn't really correct here as much down, but we went sideways. So if we do the same, but there is actually the new trend line that, you know, the slope, you see that we had this this trend line that touches those 2 points, and then we have acceleration, and when we have third acceleration in the trend. So I think eventually we have to correct and eventually retrace. Well, I'm not saying that the 37 was, I'm not calling the intermediate top or nothing here, but it's something, again, to analyze the price if seasonality plays out in the future. And I'm sitting right now, basically for myself, I'm looking to buy mining stock, which is retraced by a couple percents today, which is unusual because they will in green days after days after days, and it's the first day that little bit in the red, when the gold actually has, like, update, but a small update. So, but if we retrace to 23 level, which will be like the minimum, it's actually coincides with this top support and the prices in about 3400s. But if we retrace 0.38%, it's actually coincides with the bottom of this correction. And we will be very close to this long-term trend line. Well, I'm not thinking this like taking into account what is happening with the precious metal right now. I'm not saying that is going to happen, but it's something to think about. And then I will be, if we see like, well, I think I'm going to definitely start doing something here if we ever see those prices. And I'm not saying that this is the top right now. We could go much higher before we correct. But if I look how much we ran previously from trend lines, we kind of like we do for the correction in gold. So the probability, at least at this time, is higher than it was like before we had this breakout. And 3700 also coincide with some kind of technical levels of this breakout. Okay, so this is going to be it for this update. Please like and comment to support my work.